These notes are from Profitnama's NISM Research Analyst Guidebook. The link is provided in the description below. Now, let's learn about Indian Depository Receipts or IDRs, Global Depository Receipts or GDRs, and American Depository Receipts or ADRs. Depository receipts or DRs represent shares of a foreign company and are traded in the local market denominated in the local currency. Issuance process. First, the company or investor delivers a specific quantity of equity shares to a bank. Then, the bank places the security in its custodian account in the company's home country. Finally, the bank issues a certificate, known as a depository receipt, to investors in the overseas market. Types of depository receipts. There are two types of DRs. Sponsored depository receipts, these are initiated by the issuing company, can be listed on stock exchanges, and must comply with listing requirements. Unsponsored depository receipts, these are initiated by an investor, usually traded in OTC markets, and have fewer regulatory requirements. Two-way fungibility. This means that shares can be converted into DRs for trading in the foreign market and vice versa, but only under specific regulatory provisions. Indian Depository Receipts (IDRs). Indian companies can raise foreign currency by issuing equity shares through DRs. Likewise, foreign companies can raise equity capital in India by issuing IDRs. SEBI has set guidelines for these, which include limits on funds raised, a one-year lock-in period for conversion into shares, and availability only to resident Indian investors. An example of an IDR is Standard Chartered Bank's IDRs, which are traded in the Indian market. American Depository Receipts (ADRs). ADRs are DRs issued and traded in the USA by non-US companies. They are widely issued and have become quite popular with companies like Infosys, Wipro, ICICI Bank, and HDFC Bank. The ADR market is one of the most evolved, with American exchanges allowing them since the early 20th century. Global Depository Receipts (GDRs). These DRs can be traded in multiple countries, and they are typically preferred in European Union member states due to the regulatory similarities across the region. Hong Kong Depository Receipts (HKDRs). HKDRs are issued by non-Hong Kong companies and traded in the Hong Kong market. Benefits of depository receipts. Wider investor base, companies gain access to international investors. Investment opportunities, investors can invest in foreign shares via local exchanges using their existing brokers and local currency. Rights, holders of DRs receive dividends and capital appreciation from the underlying shares, though they usually do not have voting rights. Voting rights are currently under SEBI consideration. Examples: ADRs, Infosys, Wipro, ICICI Bank, HDFC Bank. IDRs, Standard Chartered Bank. GDRs, these are issued in multiple countries, especially within the EU. This guidebook is available as a downloadable PDF and in printed book format, with cash-on-delivery options. The link is in the description below. Become a Profitnama member today to access all our website content and get doubt-clearing support on WhatsApp. Visit Profitnama today.